Ladies and gentlemen, if I am to speak to you tonight, let it not be as a teacher who stands on some pedestal, nor as a prophet with visions of the future, but as a man who has walked through the fire of speculation, been consumed by it, rebuilt from its ashes, and been burned again. What I tell you comes not from books, nor from the tidy theories that fill the heads of professors, but from the brutal, pitiless schooling of the ticker tape and the silent judgment of the market itself. I have known triumph that made me feel invincible, and I have known despair so black that no man could see a way out of it. If my words hold any worth, it is because they were paid for in fortunes won and lost, in sleepless nights and hollow days, in mistakes repeated until they became unbearable truths. When I first walked into a bucket shop as a boy, I saw nothing more than numbers moving on a tape, and yet I understood them as if they were words written in a language that only I could read. The fluctuations spoke to me, and with them came small winnings that grew into larger winnings. Confidence built quickly. Too quickly, perhaps. A boy who finds he can beat the tape thinks himself cleverer than the world. But speculation is a stern tutor, and pride is the first capital it strips away. What comes easily is rarely kept for long. The first lesson I learned, and learned again many times, is that the market is bigger than any man. It will humble you the moment you think you have mastered it. The path was simple at first. Prices move, I follow. When they rise, I buy. When they fall, I sell. It was so clear, so natural, that I could scarcely believe others did not see it the same way. But soon I outgrew the bucket shops. As surely as a snake sheds its skin, and I stepped into the great game on Wall Street itself. There I learned the second truth. The market may be the same in all places, but the stakes are larger, the tricks more elaborate, and the consequences merciless. You cannot treat $1 million market as you would a $50 flutter. Scale changes the very air you breathe. When I tried to play the same way with bigger money, I discovered that the game had changed, and that what had worked for a boy in the shops did not work for a man with the size of capital that moves prices instead of merely following them. The market punished my ignorance as surely as a whip across the back. I lost, and I lost heavily. Yet each loss carved its lesson into me deeper than any book could. I learned that my method must evolve as my capital grew. That to repeat the same play without adjusting for size was folly, and that the larger my stake, the more patience and timing were required. Let me confess something that many traders will not. Losing does not only empty the pocket, it poisons the mind. A man may know all the rules, may even see the truth before him, and yet the memory of his last loss will paralyze his hand when the opportunity presents itself. Fear will whisper, "Remember the pain," and greed will whisper, "This time will be different." And between the two voices a man is torn to pieces. The hardest thing in speculation is not to think correctly, but to act correctly, to act when you must and refrain when you must not, and to do so without the poison of past mistakes clouding your judgment. Discipline is not a word for books, it is the life or death of the trader. And yet, despite the pain, I rose. Time after time, when I had been wiped out, I came back. I studied, I watched, I waited, and when the tide turned in my favor, I struck hard. This is the strange gift of the market. It always offers another chance, but never to the unprepared. There is no sympathy in the market, no forgiveness, but there is opportunity, waiting like a coin on the street for the man who sees it and dares to stoop to pick it up. Many times I made and lost fortunes, and each fortune remade was larger than the last. But do not envy this path. For every rise the fall waited, and every fall struck deeper than the one before. I will tell you something about crowds, for no trader can afford to ignore them. The market is nothing but human nature on display, magnified and multiplied. Hope, fear, greed, panic, these are the forces that move prices far more than earnings or production or politics. A man who can read the crowd, who can sense when the great body of traders leans too far one way or another, has an advantage no calculation can match. But beware, when you trade against the crowd, you must be strong enough to endure being wrong before you are proved right. I have often known I was right in the long run, and yet I was ruined in the short run, because my timing was off. Being early is no better than being wrong when your capital runs dry before the market comes around. There were days when the tape sang like music to me, when each movement confirmed my reading, when profits rolled in, and it seemed as though I could not lose. In those days I felt a power that lifted me above other men, a certainty that the market and I were one. And then there were days when the same tape mocked me, when every turn was a trick, and every profit was snatched away before I could claim it. Those days taught me humility, though I often forgot the lesson soon after. Success breeds arrogance, arrogance breeds disaster. Over and over I proved this with my own fortune. It is not enough to know the market. You must know yourself, and knowing yourself is the hardest knowledge of all. There is another enemy, more subtle than fear or greed. It is boredom. The market rewards patience, but patience means waiting, and waiting breeds restlessness. A trader who cannot wait will trade when he should not, will seek action for its own sake, and in doing so will hand his money to the market in exchange for nothing. I too have fallen to this weakness. Many of my worst losses came not from great mistakes of judgment, but from the simple inability to sit still when there was nothing to do. A man must learn to wait for the high probability opportunity, and when it comes, to act with all his might. Until then, he must sit like a hunter in the blind, watching, silent, unmoving. Few men can endure such waiting. Fewer still can act with decision when the time comes. But it is the only way. Now let me speak of ruin, for I have known it more than once. To be ruined is not only to lose money, it is to lose reputation, to lose friends, to lose the faith of others and of oneself. It is to walk down the street and feel the eyes of men upon you, knowing they whisper of your fall. It is to sit alone at night and ask yourself if you were ever truly wise, or only lucky, and whether the world has finally unmasked you as a fool. No man escapes ruin without scars, but scars can teach if a man will let them. I learned in ruin what success could never teach me, that nothing is permanent, that the market cares nothing for you, that survival is more important than victory. He who survives can fight another day. He who is destroyed has nothing left but stories. I tell you this, too. The greatest enemy of the trader is his own desire for wealth beyond reason. It is not enough to make a fortune. The mind whispers that it must be doubled, tripled, multiplied without end. The same hand that once trembled with joy at 10,000 will later throw away millions in pursuit of more. I have seen it in myself. I have seen it in others, and it leads always to the same place. A trader who seeks only money will never have enough, and in seeking, he will destroy himself. The true art of speculation is not in making money, but in making correct decisions, in mastering the self, in playing the game with honor against the impersonal forces of the market. The money is but a scorecard, nothing more, and yet money is power, and power is intoxicating. I confess I was drunk with it more than once. I lived as a king and lost as a beggar, and in both states I was still the same man, chasing the same ghost across the ticker tape. Perhaps that is the true lesson, that the game itself is the attraction, that speculation is not a means to an end, but an end in itself. For if it were only about money, I could have retired after the first great fortune. But I did not, I could not. I returned to the game again and again, as a moth returns to the flame, unable to resist the light even knowing it will burn. Some will hear this and shake their heads, calling me reckless, foolish, addicted. Perhaps they are right. But I tell you this, to have lived without playing the game would have been a lesser life. To have known the market, in all its cruelty and generosity, its beauty and its terror, is to have lived fully. Few men can say they have faced the market and won, even for a time. Fewer still can say they have faced it and lost, and returned to face it again. That is the true courage of the trader, not in victory, but in persistence. If you would take anything from my story, take this: the market is a hard master, but a just one. It pays well to those who respect it, and it destroys utterly those who defy it. Learn patience. Learn discipline. Learn to act without hope and without fear, guided only by the truth of the price before you. Do not trade for excitement, or for vanity, or for greed. Trade because you have read the tape, because the conditions are right, because your judgment is clear and your plan is sound. And when the trade goes against you, as it surely will sometimes, accept it without bitterness, without doubling down in anger, without chasing what is already lost. The market does not care. It moves on indifferent, and only the trader who can do the same will survive. I have given my life to speculation, and it has given me both more and less than I ever imagined. It has lifted me to heights that kings might envy, and cast me down to depths where no man would wish to dwell. It has taught me truths about men, about crowds, about myself, that I could have learned nowhere else. It has broken me and remade me, time and again, until I scarcely know which of me is the true man, the one who won or the one who lost, perhaps both, perhaps neither. But I know this: every tick of the tape is a heartbeat of human nature, and to listen to it is to hear the soul of the market itself. So I leave you with this final thought. Do not seek certainty in the market, for there is none. Do not seek riches beyond measure, for they will not satisfy you. Seek only to play the game well, to survive its storms, to act with discipline, and to accept with humility. When a man begins with small stakes, he imagines that the method, which has served him at the outset, will serve him forever, only enlarged in proportion. He says to himself, if I can turn a few dollars into hundreds, then I can surely turn hundreds into thousands, and thousands into millions, simply by repeating the same play. But the market is not so simple, and it is not so generous. What works with a small account is often the very thing that will undo you when your stake grows larger. A boy tossing pebbles into a pond may delight at the ripples he makes, but the man who tries to toss boulders will soon find that he has disturbed the whole water. Size changes everything, and the market punishes those who fail to recognize it. With a small stake, a man can dart in and out of the market like a fish, unseen, unnoticed, making his profits on the edges where no one cares about his presence. The bucket shops of my youth were the perfect training ground for such maneuvers. A few shares here, a few shares there. The numbers on the tape scarcely registered my movements. I was invisible, and invisibility is a great advantage to the small speculator. He can make his play and take his profit without leaving a trace. But once the stake grows, once you are no longer a minnow but a whale, the very act of buying or selling changes the situation. You cannot slip in unnoticed. Your orders move prices. Your presence is felt. What once required only speed now requires cunning, patience, and timing of a different order. A boy who makes 100 in a day feels like a genius. He imagines that the same percentage gain on 100,000 is waiting just around the corner. But when he tries it, he discovers that the market is not so accommodating. The liquidity that absorbed his tiny play cannot absorb his larger one without shifting the very price he hopes to capture. He is no longer reacting to the market, he is creating it. This is a different game altogether, and it demands a new method. Yet most men, drunk on their early successes, refuse to change. They believe they can scale up their old tricks and reap fortunes. Instead, they reap ruin. When I first brought real money into the market, I thought I could play as I had always played. I would buy because the tape told me to buy, sell because it told me to sell, and the profits would come as surely as they had before. But I quickly found myself wrong. With size, every misstep grows larger, every hesitation costs more, every error magnifies. A loss that once stung a little now crippled me. Worse, my very size made it harder to reverse course. With a small stake, you can change your mind on a whim, you can sell and walk away, and the market scarcely notices. With a large stake, you cannot unwind so easily. The very act of selling drives the price against you. You are trapped by your own weight. The small trader can be nimble, but the large trader must be deliberate. He must think not only of direction but of timing, not only of the next point or two, but of the broader trend that can absorb his orders without betraying him. He must wait longer for the right setup, because only in those moments of genuine momentum can he place size without immediate resistance. The tape that once spoke in whispers now demands to be read with a different ear, for the signals are the same, but the execution is not. I learned, painfully and repeatedly, that size is the most merciless teacher in speculation. It punishes the hasty, the greedy, and the stubborn with equal cruelty. One of the hardest lessons was that profits could no longer be taken quickly. A small speculator can afford to grab a point here, 2 points there, and be content. A large speculator cannot. The commissions, the slippage, the sheer difficulty of moving size in and out make such small profits meaningless. He must aim for the larger swings, the real movements that justify the risk of putting heavy money to work. This requires patience, a quality that does not come easily to men intoxicated by the action of the market. To sit, to wait, to do nothing until the tide itself moves. This is the discipline that separates those who survive from those who vanish. I had to learn to wait for the big moves, to hold positions for longer than I thought I could, to endure the fluctuations that shook me with fear, because only by capturing the broad market swings could I make my size work in my favor instead of against me. Yet waiting carries its own dangers. A large trader who waits too long, who hesitates at the critical moment, loses not only the profit, but the opportunity itself. The window closes. The crowd rushes in. The move is spent before he even places his order. With a small stake, you can afford such mistakes. For another opportunity always lies just around the corner. With a large stake, missed opportunities are costly, not because they drain the account, but because they weaken the resolve. Doubt grows, frustration builds. The temptation to force a trade, to act simply because nothing has been done for too long, grows unbearable. And that forced trade, made without the clear signal, is often the one that destroys months of careful preparation. I discovered that the very psychology of trading changes with size. A small trader can treat the market as a game, taking his winnings lightly and his losses without much pain. A large trader cannot. Every decision weighs heavily, every fluctuation feels magnified, and the mind itself becomes the greatest obstacle. The fear of losing large sums paralyzes, and the greed for large sums blinds. It is one thing to watch a small position swing against you by a few hundred. It is another to watch a massive position swing against you by millions. The pressure is unbearable to most men, and it breaks them. I have felt that pressure. And I can tell you that it does not make a man wiser, it makes him desperate, unless he has learned iron discipline. The shift from small to large is not only a matter of numbers, it is a transformation of the entire game. With small money, you can think only of yourself. With large money, you must think of the crowd, of liquidity, of the very structure of the market. You must be part trader, part general, planning campaigns instead of raids, thinking in terms of strategy instead of tactics. A raid can win a skirmish, but only strategy can win a campaign. And campaigns require patience, resources, and the willingness to endure setbacks without losing the larger vision. The irony is that many men ruin themselves precisely because they cannot let go of the habits that brought them their first success. They believe that the tape has blessed them with a special gift, that the market will bend to them as it did when they were small. They fail to see that the market has changed not because its nature is different, but because their own size has altered their relationship to it. They are no longer students of the tape, they are actors upon its stage. And actors who forget they are no longer in the audience always come to grief. I learned, often too late, that humility must grow in proportion to capital. The larger the stake, the more cautious the trader must become. The small trader can afford to be reckless and recover. The large trader cannot. Recklessness at size is fatal. The larger the position, the fewer the opportunities worth seizing, and the longer the waiting between them. Impatience at small size is forgivable. Impatience at large size is ruinous. The small trader thinks he has conquered the market when he doubles his account. The large trader knows he has only survived another day when he preserves his capital. This is the difference size creates, and it is a difference that most never learn until it is too late. To be right in speculation is not enough. A man may see the truth as clear as the sun at noon. He may know beyond any doubt that the market must turn, that prices cannot hold, that the great swing is inevitable, and yet if he is too early, he is as ruined as the man who was wrong. This is one of the cruelest truths the market teaches, for it mocks the very idea of foresight. Men imagine that the secret is to predict, to know before others what must come. But the market does not reward the first to know. It rewards the one who acts at the moment when the world is ready to agree. To be too soon is to be crushed under the weight of the crowd, even when the crowd is marching toward its own destruction. I have been early more times than I care to count. I have sold stocks at the very beginning of great declines, only to watch them soar further before they finally collapsed. I have bought into the start of great bull markets, only to be shaken out when the rally stalled before its true run began. Each time I was right in the long run, and each time I lost heavily in the short run. My vision did not fail me, but my timing did. And timing is everything when capital is finite. The market can stay wrong longer than you can stay solvent. Those who forget this truth learn it at the cost of their fortune. The crowd is never in a hurry to admit its error. When prices are high and men are giddy with profits, you may see clearly that the end is near. The signs are plain speculation everywhere. Money thrown at worthless stocks, fortunes made overnight. You sell, believing yourself wise, but the crowd has not finished its reverie. They push prices higher still, and each point against you drains your account, until you are forced to cover at a loss. Later, when the collapse comes just as you foresaw, you are no longer in the game. The man who was wrong but stayed with the crowd may even come out better than you, for he rode the last wave of profits while you drowned in your own correctness. This is the paradox of being early. Likewise in a bear market. When prices are beaten down and despair is everywhere, you may see that the tide is about to turn. You buy, confident that the bottom is near, that the great recovery is at hand. But the crowd is not ready to believe. They sell more, driving prices lower. Each new low shakes your confidence, and each margin call forces you closer to ruin. By the time the market finally reverses and races upward, you have been thrown out, a casualty of your own foresight. You were right, but you were too soon, and in speculation that is no better than being wrong. The small trader may shrug at such lessons, for with small size, being early can sometimes be endured. He can hold, he can wait, he can ride out the storm until the market vindicates him. But with size, being early is fatal. The larger the stake, the more pressure each fluctuation brings, the more impossible it becomes to hold through the storm. Size magnifies timing. What might be survivable for a small man becomes deadly for a large one. And so the larger you grow, the more essential it becomes not only to be right, but to be right at the right time. The danger of being early is made worse by pride. A man who sees the truth before others feels a certain arrogance. He believes himself superior, more intelligent, more perceptive. He grows stubborn. He holds to his position because he knows he is right, and in the end he will be proved right. But the market does not pay him for his knowledge, it punishes him for his obstinacy. The tape does not care that he has foreseen the inevitable. It only cares that his position is bleeding, and it will bleed him until he is forced out. I have done this myself, more than once, convinced that my foresight gave me a kind of immunity. It did not. The market stripped me of that illusion as ruthlessly as it strips men of their fortunes. Patience is the antidote to this poison. But patience is hard when you know the truth. To see what must come, and to wait for it is the hardest discipline of all. A man who waits too long risks missing the move altogether, and a man who acts too soon risks being broken before the move arrives. There is no formula for this balance. It is a matter of judgment, of experience, of listening to the tape until it speaks not only of direction but of readiness. The signs are subtle. The market gives hunts when the crowd is about to shift, when the weight of opinion is about to crack. To learn to read these hints is the work of years, and even the best fail as often as they succeed. Consider the difference between the thinker and the trader. The thinker may be proud of being first, of seeing before others what must come. The trader cannot afford such vanity. The trader must be content not to be the first, but to be the one who profits. It is better to be late and right than early and ruined. The trader waits until the market confirms his judgment. until the tape itself shows that the crowd has begun to turn. He does not seek to outsmart the market by hours or days. He seeks to align himself with it at the moment of change. This is not as satisfying to the ego, but it is the only way to survive. I recall times when my judgment told me the market was finished with its rise, that stocks were overvalued, that a crash was certain. I sold, I shorted. I took my stand, and I watched in horror as prices rose day after day, mocking me, bleeding me, until I had no choice but to retreat. Weeks later the crash came, as inevitable as I had known it would, but I was not there to profit. I had wasted my strength fighting the crowd too soon. I had been right, but being right too early is the same as being wrong. The market does not keep score in theories, it keeps score in dollars, and in dollars I had lost. The same happened in reverse. At the end of long declines, when despair covered the land, I would see that the market had reached its bottom. I would buy, and for a moment I would feel clever, courageous, far-sighted. Then the market would break again, dragging me down, forcing me out. Later, when the great rally began, I watched it from the sidelines. My capital too depleted to take advantage. Once more I had been right, but too soon. Once more my correctness was worthless. The discipline required is almost inhuman. To see the truth, to know it, and yet to wait until the crowd confirms it. That is the task. Most men cannot bear it. They act as soon as they know, unable to sit still, unable to endure the torment of inaction. They pay the price for their impatience. The rare man who can wait, who can hold his fire until the exact moment, is the one who profits. The rest are left to boast of how they saw it coming, a poor consolation for an empty account. The irony is that the market often rewards the foolish who simply follow the crowd more than the wise who see ahead of it. The fool rides the last wave of profits before the crash, the last decline before the rally, and by sheer luck of timing he profits where the wise man loses. But this luck is not lasting. The fool will give back his profits in time, while the patient trader, if he can endure the waiting, will harvest again and again. Yet the temptation to act early, to prove oneself smarter than the crowd, remains strong. It is a temptation that has ruined many, myself among them. Being early teaches humility more brutally than being wrong. When you are wrong, you can blame your judgment, your reading of the tape, your analysis. You can adjust, you can learn. But when you are right and still lose, the blow is deeper. It shakes your faith not only in your method, but in the very possibility of success. It makes you doubt whether correctness has any value at all. It is in these moments that traders are most vulnerable to despair, to rashness, to abandoning discipline altogether. And that is the true danger of being early. It does not only take your money, it takes your confidence. And without confidence, a trader is finished before he begins. To guard against this, one must remember that the market is not a place to prove oneself, not a stage for intellect or ego. It is a place to survive and to profit. To survive, one must trade not when he thinks he is right, but when the market shows that he is right. The tape does not lie, but it does not hurry either. It reveals the truth in its own time, not in yours. The trader who cannot wait for that moment will find himself punished, again and again, until either he learns or he is destroyed. There is a difference between losing and being ruined, and a man who speculates long enough comes to understand that distinction in his bones. A loss is an incident, a stumble on the path, an expensive tuition paid to the market in exchange for knowledge. Ruin is something altogether different. Ruin is final. Ruin is the point at which you can no longer play the game. The point at which the market has not only stripped you of money, but of the very means to participate. This is why survival matters more than victory. A man who survives can return tomorrow, next week, next year, and eventually he will find himself on the right side of the great swings. A man who is ruined cannot. He is out of the game, and the market does not remember him. In the beginning, when a trader first tastes the sweetness of profit, he thinks only of winning. He believes victory is all that matters, that to be right is the highest aim. He courts risk recklessly because he imagines himself destined to win more often than he loses. But the market punishes this arrogance without mercy. Even the cleverest trader is wrong often. Even the most disciplined speculator will find himself caught in traps, shaken by fluctuations, betrayed by timing. Victory cannot be guaranteed. What can be guaranteed is that the man who has preserved his capital, who has avoided destruction, will still have the chance to strike when conditions align. That chance is everything. Without it, there is nothing. I have seen men undone, not because they lacked skill or judgment, but because they refused to respect survival. They pressed when they should have waited. They doubled down when they should have cut their losses. They treated the market as if it owed them vindication, as if persistence alone could bend prices to their will. The market does not care. It will drive a man to the poorhouse without a second thought. Survival demands humility. It demands the willingness to admit error quickly, to take the small loss rather than risk the large one. It demands the discipline to stand aside when the tape is unclear, to conserve strength for another day. Victory is tempting, but survival is essential. I remember times when my accounts were high, my fortune immense, and I believed nothing could touch me. At such times, I would take risks that in my early days I would never have dared. The very size of my fortune gave me a false sense of safety. I thought, even if I lose heavily, I have more than enough to withstand it. And yet the market has a way of whittling down even the largest fortune if a man grows careless. Each loss, bearable on its own, leads to the next until the erosion becomes a landslide.